Rod Goosen and Spoon for Risk commentary on the highs of September 1st. We've talked about the lows, but we also need to talk about the highs. So let's go back to the beginning of the day. And you can see how the premium was dropping right off the bat. Premium is really dropping. And then we get these significant spikes down. We had some fairly significant spikes down in the first couple of minutes, but it's not always an accurate picture because not all stocks on the S&P 500 cash index have opened, so it skews the premium. So I wouldn't really call those accurate. Over here, yeah, these are accurate. Now, so premium is dropping, Spoos come down. But on the way back up, just to retrace it, we get this huge bar. Okay, get this huge bar. Market moves up, drops off, and then boom. Big premium bar taking us up to 68.50. That's where that line is, which is a UU bar, a UU high. Now, if you don't know what that is, come and take a demo. We'll discuss that with you. It's a little different nomenclature than we've used in the past, but it's a predictive bar in a falling market. That's basically what it is. So we're suggesting, based on the premium, that 68.70 level is going to be tested. Was it tested? Oh yeah. After the market dropped, to that predicted low, if you looked at our previous video, we've been talking about that low. 2155.25 was a low value area, and we hit that fairly soon yesterday morning. But there again, we had that predicted bar. Now watch what happens when the market begins to rally back and gets right up there to that same price so frequently, right? Either right at that price or very close to it. The market or the premium will tell you whether it's going to continue. And sure enough, boom, the premium bar just spikes right up above that UU level and says, oh yeah, we're going to continue this. We're going to continue this. And of course, that's exactly what happens. Now, we're not showing you the premium levels beyond 12 o'clock in this particular instance, but you can see how we move right back up there again before the close. And then we're way up above those levels on the morning of the 2nd. And we'll come back and we'll do a video for the 2nd in just a little bit. But there was your single big bar that really was predictive in this instance. Now we're going to take the moment to also comment on the lows. Now we said in our previous video that as this market dropped into the low, and you look at where the PT is here, right? And just look at the slope. Whoa, this is coming down. Now, granted, you've got a fairly substantial divergence in the premium here when we come into these lows. But I think the rally there was really more off of the support level of the low value area that we just showed you. But the premium, as we said, premium has suggested, oh, we're coming back down. And we still believe that. I mean, we've got to go with what the premium says. But now look at the rest of the day, right? Okay. Now let's analyze this from a couple of different angles. Let's just suppose, we don't believe this, but let's just suppose that this pivot level was valid. All right. Now, how can we test that out? All we do is we come into the indicator and we just reset the time. And we'll reset that time to, say, about 9:55. That'll pick up that pivot. All right, so that pivot low is at -251. What happens here? All right, we drop down there. Now we get some divergence on that pivot. That's true. We get some divergence, but we get that nice drop again. And then let's extend this out a little further. As we drop off in the afternoon, okay, on this pivot bar, we drop below. We come into here, and here, we're above that level. But then, right in here, let's see if we can line that up. We drop again, we get some divergence, and then we shoot back up before the close. So that level's maybe not too predictive. So let's rethink this. Let's look at the actual low. All right. Or pardon me. That's not the actual low. This is the actual low. Let's look at the higher low. Let's look at the LL level in this instance. Now the LL level has to do with a pivot that is taking place in a rising market. And we need to locate that LL right in here. And our setting is just a little off at the moment. Let's just reset this. Now all we did is just change our pivot definition to pick up this LL. So that's at -229. So let's take this forward and see where we're at. Okay. So okay, so that low is tested over here. All right, notice how the premium is dropped below that level at 62.25, I believe it is. Then we come back and we test that again, and the premium is even lower. Okay, premium is even lower. And from that standpoint, all right, look at this bar and this bar and this bar. All right, it's kind of pointing down. So, got a little information there to work with to suggest that that 62.25 level is being predicted, and the market, of course, as you know, is shorting, and we just penetrated that level this morning, and we're short at the moment. We shorted this high. So let's now analyze today. Just see where the premium's at. Okay. All right, so our PT. Okay. Our UT, good. Oh yeah. Okay. Look at that. So we move up to this high at 83.25. We get our UT. And we get a little bit, we test that here. And then we come up to our final high here at 83.75. And the UT is much, much lower. See how this is stepping down from here to here to here to here. See how the premium is saying, "Whoa, we don't have anything here. We don't have anything. This market is dropping." Okay. Now, from that UT, what do we see? A little spike up right in here. And let's line this up. Okay. So that gets tested fairly quickly. Just right at that price level, all right, 81. Just a couple of bars later. We're working with a 10-second chart here. Then we drop below. Now we're above that level again. And we go up a little bit. So we'll probably test 80.50. Yeah, we'll come back to 80.50 based on what the premium is saying. But as we begin to drop, you see these big drops on the premium. Now go backward to this low, right? Now that's your PT at -2. And we just dropped below that here in the last couple of minutes. And down we come. So what we do here, all right, we're not going to really reset anything until we come back to the opening low at 77.50, which we're hitting just now. And what do we see happening? See, right as we drop into that same price, where's the premium? You see, it's dropping lower than that level. So we're going to continue this drop down. Now, on that basis, all right, you can usually say, you know, from an IB standpoint, all right, your initial balance, okay, that level, that low of 77.50, well, that's got to get breached, you see. See, if this market is short, then the initial low here is going to get penetrated. All right. We're going to go below that, considerably below that, as a matter of fact, because if you run your IB calculation off of the high and the low, your first or second, your 1.5 or second level standard deviation at 2 is going to be dropping, so probably taking us right back into this the gap fill from yesterday, if you want to call it that. That's not really a gap, but that does raise some interesting possibilities. We ought to take a look at the market, see if there's any actual gaps in this rally. Well, let's take a minute. Let's take a look at if we've got any gaps during this rally. I'll show you how we do that. All right, so we come over to our gap workspace, and this is just running on a 20-second bar chart, which is fairly accurate for the overnight market. Might even be a little bit much, but once we get into this rally, we've got to check for gaps, and there's much more volume come this economic report. So all we do is we change the seconds, and I'm going to go stepping it down at a 5-second interval. We'll check for gaps at 15 seconds. Okay. Nothing on the right side. Now let's check for gaps at 10 seconds. Still nothing. Okay. All right. So we're fairly safe here. Fairly safe. If we go to 5 seconds, it becomes less predictable. But we're going to do it anyway, just to see. We'll probably get some. Oh, no. We did not on this move up. That's interesting. Okay, now we do have some gaps down there at 59, 57. But that's from yesterday. That's and again, these are, that's not too statistically significant. They exist, but I'm not going to give that much weight. 10 to 15 seconds, yeah, more probable, but we don't see any. Okay, so all right. But what we do see are huge range bars. All right, let's take a look at the range bar situation. Okay, we only interesting. We only had one range bar right in here. So, all right, nothing else that's really telling us about this drop. So, really, the key is to go back to the premium and to check the IB. Now we're just about at the IB calculation time frame. Let's just go over to our workspace here. We've done a little analysis of our Fibonacci extensions. Let's get this nice and lined up. So I ran an extension off of these three levels here, here, and really over here. And that's what it looks like. But that's not really where we ought to be running these extension from. It really ought to be here, here, and over here. So we're going to recalculate that off of this high at 82.25. Okay, and then off of this low here of 59.50. That really doesn't matter. It doesn't matter where you place these as long as the prices are correct. And this is where your extensions wind up. So we're kind of bouncing off that 100% extension line. Okay, so IB is up and ready. So I'm just going to shut this down and turn on the IB calculation. Okay, so 2 standard deviations down will take us right into here, around that 71. And the premium is suggesting even below that, which I think is valid. Quite valid, actually. So whether we'll get there or not remains to be seen. Whether we're going to get to this low today remains to be seen. But the premium from yesterday did suggest that was quite possible. All right, so we call this a home run. In other words, if you can see good reason to, in this case, take a short, the probability that the market is going to go down to this first standard deviation level down here, which is at a 74.50 roughly. We call that a home run. A home run, right? So holding that short based upon the expectation that this will drop. Now, what's the probability that that will happen? We've been running a calculation since the beginning of the year of the number of instances where the IB calculation has hit at least the first standard deviation level. Mondays are the very worst days. 77% of the time, the market manages to get to that first standard deviation projection. Tuesdays, almost 86%. Wednesdays are the very best day, better than 88%. Thursdays are the second worst day. And Fridays, about 82%. So most of the time, 4 out of 5 days a week, the probability is better than 80%. Today is kind of average, 82, 83%. So in order of worst to best, Mondays are your worst, then followed by Thursdays. Fridays are your next worst, but your 2 best days are Tuesday and Wednesday for hitting that level. Okay, there you have it. All right, so you know where we think we're going, and looking at the profile. Let's take a look at the profile, and then we'll finish up this video. All right. Okay, we said that we were going to go back to 80.50. You can see that we've now done that several times, and it looks like we're coming back one more time. But just to explain this workspace, we run there are 2 indicators here. The first indicator is the daily profile, using the overnight market as a basis for the profile lines. And then we also run the VWAP. And the VWAP is right up there at 80.50. And we've got 2 VWAPs in here because we're running both the ES.D and the ES. So that's going to give us two different VWAPs. But the profile lines are based upon the ES. Okay, continuous market. So your low value area is down there at 73.50, and 76.93 is your ascending VWAP. And I'm looking at the volume matrix, and it puts the VWAP at 76.75. So, yeah, that's pretty accurate. And that's based on the ES. So, this is ES.D, this is ES. So that's where we're at. So 76.75, and we just came up here on the YM and bounced off of the descending point of control, as well as on the IN. The INX came right up there to the point of control, bounced off. IMDU, we're not even close. Okay, so there's all of your data. And now going back to the premium, just see where we're at there. Nothing particularly significant on the premium. Let's just look at these lows again. Okay, nothing too significant. Let's just check this out a little further. Yeah, dropped again low. Okay, good reason to expect this market's going to continue to come down. Is there anything that suggests that we're going back up? And let's go back and look at the UU calculations. No, don't really see anything there that suggests we're going to rally back up. Looks like we're coming down. All right, that's all the time we have. If you'd like a demo of what we're doing and how we do it, give us a call. Send us an email. Learn how to read the premium. It's your best indicator out there. I'm Rod Kusiman, Spoon for Risk.